The variable capital company, VCC, much has been said. What is the hype all about?
It is a legal structure whereby the company is incorporated under the VCC Act, regulated by the Monetary Authority of Singapore and Accounting and Corporate Regulating Authority. There are two types of VCC, standalone or umbrella, and it is suitable for a wide range of investment strategies such as alternatives, traditional, both open-ended and close-ended.
So why VCCs?
Number one, by consolidating various assets under the fund structure, there will be economics of scale in terms of operational and tax efficiencies. Number two, moreover, if there are multiple investors, there will be ring fencing. Assets and liabilities of each sub-fund are segregated. 3. Most importantly, there will be investor privacy, no public access to financial statements and investor details. 4. And capital repatriation, redemptions at NAV, and dividends freely allowed out of capital.
Cayman and BVI can do the work. Why did Singapore introduce VCC?
The VCC complements existing fund structures available in Singapore, the restrictions under the Companies Act on the return of capital to shareholders, public access to identities of shareholders, and the ability to declare dividends only if there's distributable profit will all be removed under a VCC structure. Additionally, this VCC allows re-domiciliation of funds from other jurisdictions, such as from offshore Cayman to onshore Singapore, so investors can land their economic substance here. The transparent, politically and financially stable Singapore is really positioning itself as the leading asset and wealth management hub globally. What's more, in 2019, family office was in trend. The family sets up a family office to manage the asset in the fund and charges a fee for the service. However, setting up a family office requires a long lead time, significant amount of capital outlay, and experience in doing it. Therefore, not everyone can successfully set up a SFO and apply for 13x tax incentive. With the VCC, the family can invest through a VCC fund and appoint a Singapore licensed entity as fund manager and their family office. The new VCC framework will encourage the consolidation of fund domiciliation and fund management activities in Singapore, creating a full-service fund ecosystem in Singapore and maximizing the value for the full fund management value chain. The VCC also presents another avenue of account opening for clients. Traditionally, investors open accounts with private banks. With the VCC, investors can look at setting up a fund structure. Those with existing multiple private banking accounts and investments can consolidate, transfer their asset under management, that is AUM, and set up a brand new VCC or sub-fund with another custodian bank. In 2019 and before, offshore centers and family offices were in vogue. In 2020 and beyond, VCC is the way to go. Contact Raffles Family Office to find out more.